Hey guys, Mike here. So, oh boy, what a day, huh? The indexes got taken out to the woodshed, and the question is like, what in the world happened? It must have been some horrific news coming out. And it's funny because we're in that moment, I guess, in time where things that are good news for the economy are bad news for the stock market, because it means what? The Fed just might have to keep tightening, right? That's the big narrative. That's what the market is so sensitive to. I want to show you exactly what I'm talking about. Exactly what happened the very minute it happened today that sent us derailing, especially small caps, and then what to be looking out for tomorrow, what I'm going to be watching. I did want to start by saying a lot of you signed up for the membership yesterday and in the past few weeks, so I did want to make sure to take this moment to say, one, thank you. Two, make sure if you're going into the Discord to start at the top, scroll back through some of the old members videos that come out Wednesday and Friday, okay, detailed stuff, your news briefings. I'm coming up with UA trade ideas. I already got a whole bunch that I've done the research on for you guys. And this is for the community. This is for you guys. It's your Discord. It's not mine. I'm just as somebody put it, I don't know, the stepbrother that shows up every once in a while, but and let you drink part of his beer or something, right? And then, of course, the education tabs. Make sure you click on all that stuff. Put a lot of stuff down there. Don't worry if you don't do Discord and you just do Patreon. This stuff right here, I put almost everything goes in here as well, so I'll basically double post for you guys who don't want to do that, and you'll see it shoot straight to your email and stuff with all swing trade ideas, updates, everything you can imagine is posted, okay? And so again, thank you, welcome to the community. It's actually growing really fast, and so let me know if there's anything I can do or add, the channels, all that stuff. We're kind of working on stuff in the background right now, but just let me know, okay? So I did want to start off also with this right here. If you think things are bad, guys, we got to keep things in perspective here. This is the S&P 500, number of days without reaching prior high. That's where we're at. That's 2016 right there that we ain't even reached yet. And that wasn't even a bear market, by the way. Okay, that was just a regular old sell-off. And we ain't even reached that yet. And just look, there's 08, there's the dot-com, there's the 70s, the real, like, true bear markets, okay? So again, we hadn't even reached 2016 yet, and we weren't going through anything in 2016. And so let's just go on to, okay, what the heck happened, right? And I posted this immediately as soon as this happened. The ISM Institute for Supply Management survey came out, basically is what happened. And it showed actually good news for the economy. It says, wow, management services gauge, which unexpectedly rose 56.5 in November from 54.4 the month before, which is actually supposed to be good. Remember, 70% of our economy is services, right? And of course, when this came out, what happened? Oh my God. The 10-year yield went, see you later, and it popped up. Boom. Went up 1.43% very quickly. It gapped up immediately. The dollar gapped up. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And so, of course, that's bad for stocks. When the yields go up, bond prices come down, stock prices usually fall, especially if the dollar's going up with it. And so that's not a good thing. Usually crypto comes down as well. Gold, silver will come down as well as the dollar appreciates up and yields start popping off. And so, you know, again, anything that's good for saying the economy is still strong, on top of adding what happened with the labor market report Friday, they start to go, uh-oh, wait a minute, maybe the Fed's not going to be able to get off the gas pedal like we think they're going to be able to do, right? Because, you know, we're still spending, all that good stuff. And remember, we may not be buying products, because you saw the manufacturing and everything, it looks like crap, all that data. But the services data is something else, right? And that's what the majority of our economy is. We're still paying for services and experiences. We just stopped buying shoes and cars and houses, basically, right? I mean, and I'm putting this in a very simplistic way, of course. It's much more complicated than this. But when they look at that, they're like, oh, well, that's the majority of the economy, and that popped up. Does that mean it's not going to go back down next month? Of course not. But remember, the market is so it's like this seesaw. Any news that comes out, anytime those yields pop or the dollar weakens or this good, that's what we're in, right? It's all over the place, okay? And so, yeah, hey, way to go services, you know, but again, bad for the stock market and their narrative of this Fed pivot and all this stuff, right? But, you know, here's the thing to look at, and this is what happened to the SPY, by the way, or the S&P, excuse me. Now, you see right here, what happened was it went below the 200 SMA, and when that happened, look at all those red candles, right? This is the hourly. The bears just pounced on them. See you later. And this, to me, I swear, I'm not sure if people were shorting at this point in time, which means they're literally selling millions of shares into the market to push it down even farther. But that was just the bears pouncing on it immediately. But again, has it broke this trend line that it's bounced off of 1, 2, 3, 4, 5 times? No. Still hadn't even touched it. I already said I think we're coming back down to test it eventually anyway. And then they're just setting us up for a Santa Claus rally. That's just a guess, of course. But again, we're right there near the golden pocket, near that trend line, right below the 200 SMA. We knew it wasn't. I knew it wasn't going to be easy. I knew this was going to be crazy when we got to this point. And another one is the small caps got crushed, like almost 2.75%, I think, down for the day. And you can see what happened with this one too. I mean, once it broke below that 200 and it broke that trend line right there, bears just started shoving it down. I mean, pushing down as hard as they could and would not let it come back up. Because I was sitting there watching these charts. It was trying to come back, and they just wouldn't let it. You see all the red candles down there, right? And so the bears saw their opportunity. They weren't playing around. Boom, right? They pounced right on it and gave it no mercy, basically, is what happened. And especially on small caps. And so, because if yields keep going up and the Fed doesn't pivot or whatever it is, it's obviously a lot harder on smaller companies, right, for this to happen to. They don't have, like Apple, $200 billion sitting in cash and all this other stuff, right? So debt means something to them a lot more than it does Apple or Amazon or Google or any of the rest of them. And so, a couple things I'm definitely watching out for over the next few days, because, right now, what are we doing? I won't say consolidating, but, we're basically, remember, expansion and contraction, right? So we're kind of contracting right now before we expand in one direction or the other is what's happening. And what I'm really watching for is to see this right here, which I posted today in the Discord and stuff, and it was talking about the S&P and the VIX, right? And I said the VIX looks like it wants to explode as it just wedges down again, and the SPY is flirting with testing this trend line dating back to the 2022 lows, or in June, I believe. And if we just magnify this, you can see 1, 2, 3, didn't bounce there, and now we're coming up, seeing very close to trying to retest that. And if that breaks, well, all bets are off at that point in time. But when you look at the VIX, and it's hard to chart, but these look identical, right? I mean, it's just wedging down, closer and closer together. And look what happened. This is from June to the middle of August, and you got a 54% pop in the VIX right there, right? And then the other one I'm watching for is going to be Apple. Because Apple today, once again, remember this has like a 7% weight in the S&P, and you can see why that trend line is so important, because it bounced off of it and rejected multiple times in this downtrend right here, which dates back to the middle of August. And if we move back forward, you can see when it got rejected today, the bears basically pounced on it, started pushing it back down. And so if it breaks above that, and that's when I definitely see, yeah, the market's going higher, the S&P is going to break that trend line for sure. But if Apple continues to get beat down, and that 150 is a huge, not psychological level, a lot of resistance, whatever you want to call it, there's a lot of stuff right there around that 150 area it keeps trying to break above to move higher. It will absolutely push everything else higher. Because once people see Apple going higher and breaking that resistance, the other FANG stock is going to follow right along with it. And because they're so heavily weighted, it'll push the S&P up. But if it doesn't and it starts falling, right, like crazy, which we've seen a couple times this year when it got rejected, but I'd almost guarantee you behind closed doors, behind the scenes, we can't see it, Apple's buying back stock like a madman right now. That's why I think it's just maintaining around that 150 area. We've already seen they bought billions of their stock back so far, right? And so, but this is that bellwether. This is, as they say, the markets go as Apple goes. Well, unfortunately, it's true just because of the way it's weighted, okay? And so that's definitely what I'm watching for. Don't forget, the VIX was up like double digits at one point in time. It was up 10%. What does that mean? It means people are hedging. Right, they're finally buying the VIX. You can actually buy. Most people just do options on it. Most people do UVXY, whatever. The people are buying risk or hedging their portfolio with the VIX. So if it pops, cool. Their stocks start losing value, but they're still holding on to them. But they're making money because the VIX is running up, right? And so it kind of shows you, okay, people are starting to hedge. We want to get that in the last few weeks. You thought we would have got it, but we didn't. Now all of a sudden, but what am I looking for? Continuation. Do we see it tomorrow, the next day, the day after that? Or is it just a one-day thing, right? And again, until that trend line breaks in the S&P, whatever. Yeah, that's how I look at it. That's what I got to see happen to be thinking anything else. And even though Mike Wilson did come out today and say, time to sell, he came out today with a note for his clients, time to sell stocks, the risk reward is not worth it at this level. And a lot of people think that, right? And remember, a lot of people will start to short this area because of the risk reward, and if they're wrong, they'll just flip, right, immediately. As soon as they see that, all that support or resistance get broken and start going to the upside, they'll flip sides, which will make it run even more. But again, they want to be hedged and just in case, because the risk reward is in their favor right now. The risk reward is not in your favor to be long at this point in time. If you are, don't worry about that. I'm just saying that's what the hedge fund managers are saying, and they're right. I mean, I've showed you all the resistance right there. It's like, yeah, we've already been sent down twice now, so the odds are in their favor, but it doesn't mean they're right. That's kind of how you got to look at this, and so I don't know, let me know what you think in the comments and stuff. I hope you got some out of it. Again, hit the like and subscribe button if you did. For those who signed up for the membership, appreciate it. If you want to, it's down in the bottom of the description. Less than a McDonald's combo, and you get a whole lot for your money. So hope you guys have a good one, and I'll see you tomorrow for another fun, volatile day.